All right. Hey there. Good morning, everybody. Christopher Inks with Texas West Capital coming at y'all live here. Just a little bit of technical difficulty getting the stream started, but here we go. Just after 11 a.m. Central Standard Time on Friday, the 31st of May, 2024. And we're coming at you live here, of course, from just north of Houston, Texas, where it will not stop raining. I'm not sure I'm used to this. Actually, I know I'm not used to it. Not sure I can handle it. But anyway, as y'all might have seen, today's guest is going to be FiboSwanny. So hopefully you guys are excited about that. Just real quick here, we're going to talk about the Dow. I believe the Dow is headed toward 50,000, something I've been talking about for a couple of years now. Looks like we're finally going to get there. Talk about Bitcoin, Ethereum, gold, silver, the dollar, TLT, Russell small cap index, Ethereum. I think I said Ethereum. Yeah. So a few different things like that, guys. So hopefully y'all are ready for all this. And real quick, before we jump on here, I just want to say real quick here, I see he's in the audience. But Mr. Sats McGee, he is one of our students in our group coaching here. And hopefully you guys can read this. I don't know. Let me see if I can zoom this in or make it a little bit bigger or something. But if you look here, that comes in terrible. Anyway, he came in 125th out of 78,000 registrants for the TradingView Leap competition. And so absolutely amazing. And he did it by, get this, he ended up entering late. He didn't even start when it started. And then he had technical issues. And then beyond that, the man has a life. And he wasn't like day trading all day long. But he used what he learned over at the TWC Trading Academy, the group coaching there. He learned about how to look for setups, how to trade those setups, how to run with a running trailing stop loss correctly. And man, oh man, just absolutely amazing. So proud of him. Glad to see it. As you can see, he is right here. He said, "Hey, happy Friday." But anyway, this is the kind of stuff, guys. We've got this. We've got people who've consistently are passing these prop firm challenges, which, if you don't know, are notoriously difficult to even pass because they're so stringent on their risk management. But at TWC, that's what we focus on. That's the first, middle, and last of everything we do is our risk management. So we've got multiple people doing. I just heard from somebody the other day who actually passed a $250,000 evaluation. So he's going to get a $250,000 account to trade. So you guys are out here and you're like, man, only got $500 or $1,000. It's really not much. So I feel like I have to go so big and I have to ignore risk management. I have to use all this leverage and oversight. And you don't. Learn proper risk management. Learn how to understand what's going on with the markets, but really learn that proper risk management. Go take a prop firm evaluation and get access to a bigger account. They usually split the profits with you. Usually anywhere from 80 to 95% to you. So, if you make $10,000 in a month, at the low end, 80, you get 8,000 and they get 2,000. But anyway, it's something to think about, guys. But make sure if you're going with a prop account that you go with something that's more trusted, because there are a lot of scams out there. And they make a lot of their money, honestly, off the people who pay for the valuation and then they fail it. But, again, we've got multiple people jumping on it, doing it lately. So it's really exciting time. Mark Chenard would like to know, he's our resident Canadian alien comedian. He wants to know, how much of a prop account do you qualify for with terrible puns and dad jokes? 9. You get 0. You get none. No soup for you. Okay, anyway. So there was my attempt at some humor as well. Pretty bad, right? So what's going on there? I see Sats is here. I see Josh. Andrew, what's up? Drew Safai, good to see you, buddy. Eye of the Tiger is here. Everybody congratulating Sats. And they should, because it's really a fantastic thing. Something to be proud of, guys. You get in there. And by the way, if you can see that right there, he ended the month. He ended it early, and he ended with over 8% profit. So, I mean, if you could make 8% month over month, guys, absolutely insane. I know you guys are out here chasing a 1,000,000% overnight. That's not realistic. But man, I'll tell you what, right now, trading is a skill that's going to last you. And we'll bring up FiboSwanny a moment here, and I guarantee he'll agree with me. If you learn to do it correctly, trading is a skill that's going to set you for the rest of your life. Trading is a marathon, not a sprint. So, the goal is to just keep that equity curve going up, guys. So, if you can do 8% a month, and even with all those issues he had, holy crap, you'd be doing amazing, right? Let me see here. Who else is here? Soren, Murray, what's going on, guys? Good to see y'all. Let's go ahead and jump in here. Look, here's FiboSwanny. We'll pull him up without letting him know first. Look at that.
No, I'm listening. I'm ready.
Oh, man. How you doing, man? Looks like it's a beautiful day out there.
Yeah, it's a beautiful day. Like you said, I'm living in the dark. I'm a little, I can't get my camera right, but it works for now. No, we have a nice sunny day today, and looking forward to being outside later because it's nice. Not like Texas with rains and floods, and it.
Texas has been crazy the last month, I guess. Just absolute crazy tornadoes. Kind of hitting that whole Abilene to Dallas Fort Worth area, and then of course down here we had all the ridiculous rains and floods, and it won't stop raining right now. I was talking to you right before we went on here about how we're getting these severe thunderstorm warnings, like from last night, earlier in the evening, all the way through the night into this morning. It wasn't like one big one; it was just like every 30 minutes or so we get a new one, and it would keep coming.
Another storm popping up.
Oh man!
Well, a couple things I wanted to say. One, I do agree with you about the risk management. $500 or $500,000, you still want to approach it the same, because if $500 is what you got and you piss it away, then you're done trading, right?
Yep.
So you got to have risk management regardless of the amount. Second of all, I think I actually might fund Mark for puns, because I love puns and dad jokes. So maybe I'll fund Mark, and we'll start our own little hedge fund of puns.
Hey, I'm telling you, Mark's the way to go, man. He's got them in spades. I think it's that Canadian water he's been drinking.
Yeah, no, I'm a big dad joke guy. So, I'm old, so I got to stick with the dad jokes, right?
It happens, right? It happens with us.
It is, as you age, they get better, and they're more and they're funnier as we go.
That's right. That's right.
Yep.
All right, man. Well, hey, so let's go ahead and pull up your charts here. Let's see what you've got going on. Let me put us a little bit lower here.
I was just starting off with BTC, and I was watching the hourly come to a close when we started the show, and it clicks into the bear zone for us. Yeah, awesome.
Look at
right?
That. Perfect.
Yeah, and
right?
I just set it back up. So right now I'm moving the fibs in the wrong direction, but the basically what I wanted to highlight here was I don't trade the hourly, but it's always a good guide into the 4 hour if we're going to get movement. It's kind of that first step. In different time frames, they kind of stair step their way up.
Yeah.
But right now, this whole area in here is really nothing but consolidation. And I really highlighted in blue here on the chart. So we've been kind of being whipsawed back and forth on this indicator. And we go into the bull zone, it fails, goes back down and gets back into bear zone again, and went into the bull zone, comes down and fails again. And you'll get a lot of that on the hourly when it's consolidating. But I do like to see it for certain targets and those kind of things. So right now that we went into the bear zone here, and I set up the fibs going the other direction, the 200% was this previous area here, to where that would have been the first target, but it went bear. So when you stretch this out to get this low into the high, and you get the extension here, you get an extension of 66.1 to 66.4, and then this area right in here with these two lows looks like a spot at 66.3, basically where those lows were, would be a good spot for buying while in the bear zone. If you wanted to buy the hourly. But I mean, really, even if it gets down to that point, we're just still in this area of consolidation and kind of, riding this back and forth. So I've been waiting for, I was hoping that we would see the bull zone here, and then we click the hourly into the bull zone, and then get the 4 hour into the bull zone, but it kind of failed and just kept us consolidating. So I'm looking at 66.3 as a possibility here to get us that first possible buy target on the downside. But when you flip over to the 4 hour, I'm same kind of thing. I'm just highlighting this in blue, basically where the bull zone and the bear zone overlap. If they don't really break into the zone, or breaking out of that area, you don't really trend much. And as you can see, the ADX drops and has been really low here for a while. And so I'm highlighting this in blue. The one good thing is we're still kind of holding this support at the bottom of the bull zone here, which is a good sign, that we're at this spot. But with no momentum, it's really just kind of, in this range of boringness. But the first target that we would get while we're in the bear zone here is right around 66K right here, and that's the 61.8% level. Would be that first target, which kind of coincides to the moving the fibs down even further now. The 66.1 is the bottom of this fib extension range. So this area right in here, just above the 61.8% level, could also be the spot to get in while in the bear zone on the 4-hour. But then again, if you get 3 consecutive settles underneath this level here at 66K, if you go long here and it gets 3 settles underneath, you're going to stop it and wait for much lower targets down here at 62, maybe even further down if it starts to really build some momentum for the bears. But really right now it's still consolidation on both of these, and I'm just looking for targets to get back in. I was hoping that when the hourly here went into the bull zone and it started to click in, I was looking at the 4-hour here, and the 4-hour rallied up, but it didn't break into the bull zone. So there was no buys for me on the hourly, the 4-hour. Both of them are just still kind of waiting. I'm just kind of waiting patiently. It's kind of boring, but that's where I'm at on those 2 time frames. Now I am still long on the daily, because daily's in the bull zone. We bought into the bull zone right in here. I actually I can't remember if I took profit or not. There's a lot of different things going on, but I'm long this contract, and I'm also long from way back here that's never hit a target. So I'm actually long 20% of my bucket. So when I say 20%, it's every asset that I trade in each time frame has a bucket of capital for each one. So it's 20% of that bucket of capital. So when I say 20%, it's not like 20% of my overall, net worth or anything like that.
Wait, you mean you don't go all in, all long, oversized, over leveraged, one shot?
Nope. Nope. Haven't done that for years. We used to call those like when I was trading cattle, we used to call those the Rio de Janeiro trade. You just now this is what we would do is we find a broker that will allow you to get, extremely leveraged with a lot of money. And then if it goes your way, you're rich as hell. But if it doesn't, you move your ass to Rio and never come back. That was what we always call. That was the Rio de Janeiro trade.
Nice.
But I haven't done those. I haven't even tried those in a long time. So I've matured and used a lot more risk management tools to keep alive here. But given this, we're long on the daily, still in the bull zone. You can get all the way down to just above 63 and still be in the bull zone. So this market could correct back even further and still maintain that bullish structure, at least from the daily onward. But then, you're still right in that hour and 4-hour looking for that downside target. Now, if we get all the way down to the support here on this range at 63, when you look at this 4-hour, that the 62.3 down here could be a nice wick trade if it gets down to that point. But there's a lot of ifs and a lot of what's going on here, because this target here at the 66K could easily hold here on the hourly and the 4-hour, and then stay in consolidation and finally break us out to the upside later. Or we correct all the way back down to 62 or 63. Then we get in long on the 4-hour and the daily hold support, and then we can go from there. So those are kind of the levels that I'm looking at as I'm watching BTC here. And then finally on the weekly, just kind of keeping an eye on it. Held where it was supposed to, worked its way up. It's definitely hitting some previous high resistance here that really hasn't had 3 settles above it yet. But ultimately, based on the pattern, I still have a target of about 80K that we could or should get to on this leg. So given the structure, we should, if this, especially if the 62 holds, because if we go all the way back down on the weekly here, I mean, the 62 is about right there, 63, 62.
Yeah.
So it could get down to this trend line again before heading higher. But even if it gets down to that point, you're not even close to a bear zone. So everything on the daily and the weekly are bullishly structured. So that's mainly what I'm looking at here. So like to see what you got on BTC.
Yeah, actually, I was gonna say, let me pull up my chart here. Let's see here. Oops, there we go.
See if I get more light on this
Yeah,
camera.
okay, there we go. I was gonna say the actually you mentioned that 62,000 kind of level. You know, kind of looking at this and you know, if you're zooming in, this looks like it could be a 1-2 and then a 1, maybe a 2 forming here. Looking at it here, you know, you can maybe get like a, I don't know, maybe get like a 1, 2, 3, 4, 5. So you get like a 1, 2, 3, 4, 5 is some really crappy kind of leading diagonal. But this rally up off that swing low, that 62,000 level is actually the golden pocket area right there, right around 61,977 on this particular chart. This is that Bitcoin all-time index chart. Can't even say it. All-time history index chart. So yeah, so I mean, that wouldn't be terrible at all. You know, as you can see, it kind of gives this line. You can kind of see it gives this support over here, support right in there, resistance. So it's a pretty significant area. But you know, before we get there, obviously we've got this low volume node right here, between right around 64.5 and about 65,750 or so.
Okay.
So what we should normally expect when we're looking at that is usually we would expect to get a at least some sort of support here for a bounce, if not a reversal coming out of that. So,
yeah,
you know, for
that
me,
could be an area to where if it would break, it would probably break pretty violently straight to 62, probably is what you're saying. Because there's
yeah,
not a lot
yeah.
of
If it's going to go through it, yeah, if it's going to go through it at once, it's going to be a big candle that'll go through it. And it'll pop down there. Get into, you know, your price acceptance down here, which is just going to be a lot of, you know, trading back and forth. There's liquidity there. But there's, you know, there's a lack of liquidity comparatively here at that low volume node. And that's why we usually get the rejections out of it. Or like I said, if you go through it, get a big candle through it, right? You pull back into it, came back up. You know, initially you hit it, pull back. So,
and actually, if we break to 62, crypto Twitter will go absolutely insane thinking that the sky is falling. The end of the world, Bitcoin's done, Bitcoin's dead. If it drops from where we're at today to 62 pretty quickly, they're going to think we're going back to 10K. I guarantee you'll see those tweets out there like, what? Come on, people.
Well, the way I'm looking at it right now is this idea. I'm actually, you know, again, that was the whole rally there. I'm actually looking at this as a 1-2 and then a 1-2. So you get like a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 here. So if we look at that right here at that low volume node is the 50% retracement right around 65.8 or so. And so that gets kind of interesting because then, of course, you're looking, I guess I'll just draw with this here. You're looking right here at this, and by the way, this is the daily here, at this order block right here. And so we're kind of pushing into that right now. So, you know, I could see us dipping below this swing low here and maybe getting us like an A, a B, and a C or a WXY here. But that 50% is right there at the top of that level. So my initial thought, especially with the daily Stochh RSI already oversold, RSI itself over there at neutral, is maybe we get a wick down into that, maybe even a little bit beyond that, and then follows its way back up out of that order block there. So, you know, that's what I'm kind of looking at now. There's a real small fair value gap right here. But, you know, as small as that is, it's not really of interest to me. But, you know, if we were to break down through that order block, we'd look for, you know, right there toward the top of that fair value gap is that 61.8. Well, I'm sorry. Let me see here. Yeah, the 61.8 of this smaller wave one here right around 64 and a half. 70 and a half, my favorite pullback right there is actually at 63,460. So, I mean, I think it finds support in this area. I do think it does, and we head up. Again, when we think in terms of Wyckoff, what we usually have is once you have your spring here, which is what this is, the breakdown below the range support, rally back up, you'll get your first movement up into this resistance, and then it pulls back, and then you get the big breakout. You get the big jump across the creek, which is large candle spread, large spike of volume locally there. And that would especially make a lot of sense with, again, I keep mentioning these record number of shorts sitting up here on the CME futures right there. So, I mean, I think the setup's there. I think people just have to be a little bit patient. Don't trade the 15-minute unless you're just trying to scalp some small movements. But don't get in on your 15-minute thinking you're getting your daily targets on that. So for me, watching to see if we can get the breakdown here, in which case we'll look here maybe about 65.8 and then 64,450. But if we kind of continue down through that, we'll look down here around that 62,000 area. Again, pretty close to kind of where you were looking if you got that breakdown. But like I said, even then, it's the idea that, that will take off probably after that. So this is the daily pivot. This thing will change at the end of the trading day today. So for me, that's probably here in another 6 or 7 hours.
I was just going to ask that 'cause it's the end of the month.
Yeah. But weekly still looks good. Stoke RSI threatening to break out here. RSI pulling back locally today for the weekly. But again, it's only the beginning of Friday, halfway through the day or whatever on the candle, on a daily candle. So we've still got Saturday and Sunday and plus the rest of today to go. Could change quite significantly. We'll see what happens. But I mean, overall, the range screams, reaccumulation. And so we just kind of look to see if we can get that pullback, source some liquidity before kind of taking off.
Yep, sounds good. So, I like our levels are looking pretty good. And
it's always good when they kind of come together around the same area.
Yeah, this one's actually really close. I like it. Getting pretty close on there. There's someone somebody put in the chat I thought was kind of interesting. He said the 61.8% of 100K is unironically at 61.8. So that was kind of interesting. I don't know where he was starting from, but I can see where.
Well, he said out of 100K. He said, he's looking at 100. He's looking at 61.8 going up 61.8% of.
Oh shit! I read it wrong.
We think.
I thought. Yeah. That's what I was thinking. I read it wrong. My bad.
Yeah, that's all right. They think 38% or so.
There you go. Awesome.
How do we chart? I got a question here. How do we chart indices without some of the Mag 7 stocks? I'm not comfortable seeing the Qs being heavily influenced by NVIDIA by plus 30%. Is that healthy? Healthy. I don't know. Is eating a chocolate bar healthy every day? I don't know, but we enjoy it, right? Here's the thing. New type trader, man. The one thing I don't want you to do is to get too much in your head about it, okay? Again, the big kind of quote everybody likes to post on social media is that the market can stay irrational longer than you can stay solvent. What that quote really means is what you think of the market. You think the market's being, real radical and real crazy and real out of there. That's what it means. It doesn't mean the market actually has to be, but it's all about our perceptions, right? It's not for as human beings, we tend to, our view of the world and things that we look at are colored by the way in which we perceive what happens, not actually the facts of what are happening. And that's why we often get really emotional and really driven, and we go from extremes as human beings. So, it's not so healthy, one stock really kind of driving it, but that doesn't mean that's something that ends tomorrow or even next month or even next quarter, right? And that brings back that quote that I was discussing there. So,
I have some on that too.
Go ahead.
This is that question is exactly the reason that I apply all of my tools separately to different assets, because I'm measuring. I want to measure the psychology of the market. Correct? I mean, that's what TA really is. that crowd psychology. And to me, the psychology that sits just in the NVIDIA stock itself is going to be completely different than the players and psychology that sits in the QQQ. So to me, I would do them separately and apply my TA analysis to each of those individually to measure where things could go and not get too wrapped up in what you're talking about because that starts to bring emotion into it.
Yeah.
And then that's what's going to make you think, well, maybe I should be doing more in NVIDIA than QQQ because everyone's talking about NVIDIA. And then that emotion could wreck you because it could go the other way based on the psychology that's happening in QQQ. So that, I mean, it's just I know it's a lot more work, but I feel like I've had better results when I look at things individually than trying to measure. I mean, not that it's a right or wrong. I mean, you could definitely do spread analysis and intramarket analysis and those kind of things, and that's a whole different world.
Yeah.
But for what I do, and I don't know if Chris is the same, but I look at things individually instead of wrapping things together, and it starts to confuse my head.
Yeah. No, it's simpler, and we should strive to be simple when we're trading, guys. You don't want to overcomplicate things. If you get too overcomplicated, you bring in a whole bunch of other variables. And the problem, not so much is the variables. I mean, it's a little bit of the issue, but the real issue is your emotions are tied to all, your emotions that are tied to all those different variables. And then when you look at them individually and then as them together. So, that's the real issue, guys. When people make things overly complicated, not just in trading, but in life, is our emotional attachment to all the different variables. And then trying to, rectify that in our head with our emotional attachment to the overall thing that we're considering. And so, that's why I love Fibo, man, because, everything I do is based on psychology. It's based on emotion. And then, Fibo just kind of feels the same way when we're looking at charts. And, it ends up making it, quite a successful trading endeavor. I did have a question. It says, when the TWC Fibo fund where we invest and you strictly follow rules and post trades publicly on CT. It's funny you guys say that because I'm actually, I've got a meeting with some guys this month, or I guess June coming up here. I'm looking into fund stuff. So, yeah, we'll see. We'll let y'all know more about that.
Yep. I ran a hedge fund for about 3 years at one time. So I have a little bit of that inside knowledge of how insanely crazy it is. But it's I don't know. Maybe that might be something down the line. Who knows?
Mark says he'll sell a Canadian kidney to take part. I just want to know, is it your kidney that you're going to sell, Mark, or is it somebody else's? Because, man, don't get me involved in none of this. Get me in trouble, man. I like to stay out of prison. I'm too pretty for prison. Can
you sell Canadian kidneys for Bitcoin?
Yeah, you can sell Canadian kidneys for maple syrup, I'm sure. Anyway. Oh, he says it's his. Okay. What other charts you got there, man?
All right, let's go on to I got Ethereum next. This has been I'm pretty profitable in this latest run. We had the trend line here. I was using this trend line as just a guide as a target, taking the furthest point underneath to the trend line, taking that same rate of change, which hit nicely on this move to the upside. So it hit that target and then came back down and hit the shallow fib. And then started to rally back up. So I'm still long with a target out here at 40.92, despite going into the bear zone. And this is part of my system that comes into play here. Is even though it went into the bear zone and we established the fibs going the other direction, it always has to have the 3 consecutive settles underneath the previous shallow fib. So the way I typically attack this type of environment is you're going to be long the market going up, most likely, unless you took profit and you're waiting for a shallow fib. But then we actually filled at the shallow fib working up, and then we went into the bear zone. So what I would normally do is I would reduce exposure to kind of take into consideration that it did hit a bear zone. So that's the first step, is I would reduce exposure. However, if I'm only 10% in, so say I had 20% long, I would sell 10% at the bear zone just to get the reduction in exposure. But I want to keep 10% of the exposure because the previous shallow fib hasn't been broken, even though it went into the bear zone. So you still have that bullish structure. So that's the way I would normally approach it. So even though it went into the bear zone, it's still bullish. I know that sounds kind of weird, but that's what's happening there. So if this actually drops down to this previous shallow fib, which is at 36.05 and change, that's going to be my buy while in the bear zone. And then if we get 3 settles underneath that, that would be my stop. So right now I just been kind of waiting to add more, or if this thing starts to kick back up, if it kicks back into another bull zone, I'll add and press the position, but then I'll also still keep this first target for the 10% that I'm currently long. So that's where this is kind of a weird chart, because I have a target on the downside and a target on the upside, because I'm actually long while in a bear zone. I know it gets kind of weird, but that's the way this is kind of looking. So even though we made the target and bought back, we're still in a bullish structure for some upside. So ETH on the 4 hour is still bullish, even though we're in bear zone. So if you look at the daily went into the bull zone here, and I have a target here at the 200%, or both the channel measurement here, or in other words, basically it's just taking the same thing as the furthest point from the trend line to the trend line itself, and you get the target here. So what I did was I got a point in between the 200% and this trend line target. It comes in about 42.47 as a target. So bull zone, bullish on this one. Still waiting for this consolidation to kind of pump us up to get to that target. So that's what I'm looking at on ETH on the 4 hour and daily. So that's where I'm at. I don't know if you have any ETH positions, but the only ones I have now are the actually I have them on both. Yeah, I'm long on both. What am I talking about? Yeah, I'm long on the 4 hour and the daily on both of my time frames.
Yeah, man. I'll tell you, for me, I'm good. We were looking for the breakout down here. It's kind of moved a little bit. But everybody's like, oh, so surprised because of the size of the movement. Yeah, we didn't expect maybe such a big movement, but
I
we were already looking for
either,
the breakout.
but it's nice.
Yeah.
Not
we were looking for the
but
breakout
nice.
here.
Yeah.
What was that?
I said it's not expected, but it's very nice when you're long.
Oh, for sure. Yeah. We had the descending channel going on here, or descending wedge, if you want to kind of pull that line in there. We had this reaccumulation happening here. So I was already looking for this long to play out, up toward minimally, up in this position here. But still, I've had this target up here around 51.85 for quite a while now. So when I look at this, I've got, coming off this swing low back over here on April 30th, I've got a 1 and a 2. And then I've got basically this is a 1, 2, 3, 4, 5 here. So that gives us 1, 2, and then 3. And if we zoom in, this looks like a WXY here. And then potentially we got a 1 and a 2. And I think this 2 is going to pull back further here around 36.5 or so. If we take our measurement here, that's around a 70.5 pullback there.
If that pulls back to that level, is that another WXY?
Yeah. Well, let me see here. This would be I'd have to zoom in. Let me zoom in here. 2 hour, no, 4 hour. Let's get in there. Yeah, so you see the 4 hour here. We didn't reset down in here in the RSI, and the Stochh RSI is rallying up. So let me see. Yeah, it looks like it'd probably be a W and then an X and then a Y probably coming down toward that level. That 70.5 is just right there above this this range EQ here and just above the hourly pivot as it sits right now. So I think we get that push down toward that. If we can get that 36.35 to 36.65 level, interestingly, that'll get us this wave 5 target up here at 5,200, which again is just above the 51.85 I was looking for. So right now we need to see if we can get the breakdown here, and then we want to see a rally back up out of this kind of just before the pivot area here, breaking back up above this swing high, which is 38.46 here on the Ethereum USD on Coinbase. So we get down here, break out above that, we should be good to go up here toward around 44.30 or so for that local wave 3 target, and eventually that breaks us out up here to a wave 5 again at right around 50, right around 5,200. So keeping it right aligned there with the target that I've had for Chizo Wiz forever and a day, it seems like now. So yeah, I like that.
Is there any or what's the scenario that would have to happen for the 5th wave to be the one wave there with one parenthesis that high?
This right here?
No, the previous high on the price chart.
Okay, what are you asking now?
If you just go to the high on the price chart.
Right there?
Not that one, the more current one.
Oh, this one right here.
Yeah, with the yeah.
39.73.90.
Yeah, is there a scenario that would happen that would be the actual wave 5?
I don't think so, because again, this is clearly a wave 3 here, a large candle spread, large spike of volume. And then if we're looking here, this gives us a 1 and a 2. So this is all interior here. I mean, 4, 5.
No, 5 would be.
I guess if you get up, but here's the thing. Well, here's the thing.
I don't think there was. I don't think there was. I was just asking you because I know you know this better than I do. So I was just curious if there was a scenario that would make that a 5.
Well, here's my thing. This is 3 waves down. This is 3 waves up, and it's 3 days down. So it's basically, like a flat, but it's, it'd be 3 down is W, 3 up X, and 3 down is Y. So I don't think this would actually be a 4 and then a 5 up here, and then that wave 3 there and the 4 and that being the 5. That doesn't seem to align with the idea that we've got this 3 waves higher there.
No, it makes sense when you blow it up. When you zoom in a little bit, it makes more sense.
Yeah. Again, looking at this, it just seems pretty clear to be a 3 up there.
I got you. I was just curious. I was just looking at different.
Yeah, I was just looking at the count.
I always look for alternative counts just to have in my back pocket, and I was just wondering if that was one, and it's not. When you zoomed in, it didn't look right.
Yeah, I don't think it is. Again, I'm looking at there. It looks like it's 3 down, 3 up, and then coming down here. So I don't think it is. Yep. Obviously, if we were to drop down below this wave 4 here, this swing low at 35.21 and a quarter, that would say, okay, yeah, that probably is, or this up here is wave 5. But if we look at the 12-hour Stochastic RSI is reset down here and oversold. RSI remains above neutral. Daily, we're pulling back a bit here, but again, we'll wait. We'll have to see again if we get the rally up off that that EQ area there. Weekly, though, again, weekly's just getting started. It's just breaking out like Bitcoin. It pulled up here. It's pulling back at the moment. Could potentially break out and cross bullishly up there and then push into overbought. But overall, I mean, that's a nice weekly movement right there for sure. And even if I was looking at that, again, it looks like 1, 2, 3 here, so it still looks like it's got further to push up to finish it. And then of course we have the all-time high, not too much further higher here at 48.6781. So I think we got a little bit further up. We definitely want to see it, see if we get that pullback that I'm looking for here, and then get a rally breakout above today's swing high to kind of indicate that we're heading up further after that. So yeah.
I was just looking at my ETH weekly. I didn't even think about bringing up the weekly. I have a target of 59.60. What was yours?
Of what now?
Where that 5th wave would end?
Yeah, what'd you have?
59.60 is my weekly longer term target. That's still bullish.
Yeah. Now this could also overextend, of course. This wave 3 or this wave 5 could overextend. I do have a secondary target up here around 63.50. So that's not too far off of your target there. So yeah, I think I think it would be kind of like Bitcoin if it, when they break out, like if Ethereum breaks out through its all-time high, it could get a little wacky, a little, little run there. Kind of like we expect Bitcoin to do when it breaks out of this range it's in right now.
Yeah. Throw up my chart real quick. I'll show you what I'm.
Yeah. No, I don't use Tom DeMar counts. Mr. Smith was asking. You don't either, do you?
No.
TD9, TD13, all that stuff.
Nope. And I've done variations of it for different things, but I haven't done it in a long time. Looking at the Ethereum on the weekly, we had the trend line break that, he measured out to a nice target here. So this trend line break going the other way, once it broke into this, has a target of 5960, which also matches the extent. Well, first of all, you got this extension is going to be that first target that hit right here, that fib extension target. Then we went down to the shallow fib here and got back long while it's in the bull zone. And so the next target above the fib extension zone is the 200%, which comes in at 5960, which matches up pretty nicely with the trend line break. So that's why I really like that target for a longer term look on this going forward. So I think I think there'll be probably a pretty fair amount of stops right here if it starts to break a high and get above this previous high here and get into price discovery. I think that's the high, isn't it?
Don't cheapen the previous high. It's the all-time high. Come on, man. You can't be cheapening it like it's any other previous high.
Yeah, or that's what I was getting at. That's what I was getting at. Because if it does break, it could easily launch us up into those targets that we're talking about. So
yeah.
But that I just wanted to show that. One thing I like is for my stuff is when my threshold levels and the extensions that are coming from those fib levels from where I start the fibs match up exactly on a trend line break like that on that measurement. That's what I do this for. I really like when things come together like that.
Yeah.
Because that's not a pattern that anybody would see unless you did some analysis. So I thought that was kind of interesting. I forgot about my ETH weekly, and when you started talking about it, I was like, "Yep, I got to bring that up real quick." So,
let me see here.
4 hour daily and weekly are still in bullish structure. So, so I like that for Ethereum.
Influencer Friendly was asking, he tried to search in the TV indicator list for the RSI indicator, which shows the prices in real time for the zone change. Oh no, that's something that I think Fibo just put together himself, didn't you, Fibo?
On
your RSI with the price changes?
I don't have anything programmed for that. I do it myself, but I think there's guys in my group that have programmed to let them know, like on this here.
I think that's what he was talking about.
For the guys in my group, they put this together just to see what price it would be if it broke the zone. That's all it does. Because you have to take in because when I make my zone levels, those zone levels have to go into that formula, and that's what they use. I don't have it. The guys in the group do. I just don't have it because it's never been useful for me. But the guys in my group really like to know what price level. I can see why they do it. But for what I do, I don't really need it as much. But that's where that comes from. It's the guys in my group that programmed it.
Well, there you go.
I don't know where it is on TradingView. So if you DM me, I can find out who did it and kind of hook you up with them. I just can't remember off the top of my head who's the one that did it. I get so because guys come to me all the time doing this and that and this and that. I'm like, I can't remember who did it. My bad. That's called short-term memory loss when you get older.
Stop your nonsense. Let's talk about getting older. What else you got there, man?
I was going to talk about gold too. Gold's just, I've been sitting and waiting. I did not buy this 100% here, which would be that first level to buy. Some people in my group might be long while in the bear zone. I just been kind of waiting for a new bull zone, which has not happened yet. We almost got it the other day right there, and it didn't. Even when we wicked up right there, it still didn't get into the bull zone. It had a little bit of a movement there, but I'm waiting for bull zone until I get in, or if this ends up breaking down, there's this really old previous shallow fib that's never been busted to the downside yet, and it comes from way back when on this nice bull run that it's been. But the 38.2% level of this previous shallow fib that falls inside this zone of my previous threshold. So this 2289.90 is the target that I'm looking to buy while in the bear zone, or a new bull zone. So I'm in limbo on gold, at least on the 4 hour. On the daily, still kind of limbo. We actually hit the target, came back down. Actually, I bought it again, and then I actually sold it again because I was looking for cash flow during that time. So it had nothing to do with threshold theory. So now it's stuck me in this. I'm flat, and I'm waiting for either a shallow fib buy here while it's in the bull zone, getting down to this level, or 3 consecutive settles above the 141 that's already been hit. So I'm in limbo there too. So not doing much in gold, just waiting patiently for a direction one way or the other, and not much. Hopefully you got a little bit more than I do, because mine's kind of boring and just waiting.
I'm not sure. I mean, it's really just going sideways. That's what we're doing since back here on April 12th. To me, this looks like well, it looks like A and then B and then 1, 2, 3, 4, 5 maybe. Let me see here. It looks like it could be 5 up and maybe an ABC down here. 1, 2, 3, 4, 5 maybe. Yeah. Iffy at the moment. If we can continue to push up higher here, I think it's going to suggest that the low is in right here. And then that'll give us 5 waves up here toward 2681.90. But if we do kind of break down further here, I think we do lose that support. And in that case, you know, I might look at this. I might zoom in again and see if this is maybe like 3 down and 3 up, and we're getting, you know, 5 down here, some sort of flat. And then if we're doing that, I think we're looking down here toward, you know, 2216 at least, potentially even get down here toward 2170 or so on that. I think it stays for now anyway. It stays above this, whatever this swing high was right here. Let's see, 2152.30. I think it stays above there. Whatever happens, I think it stays above there. But it's just going to depend on, do we continue to break out from here, in which case then we look up there toward that 2681, 2682, or do we break down below that? Because I think that does open up that move on down toward those 2 potential targets I was looking there. But really, again, guys, it's just sideways here since April 12th, so about a month and a half. And when you're sideways, guys, you just got to kind of, you know, wait for some impulsive movement one way or the other.
Yeah, it's a
otherwise
patience
it's just
game.
overlapping price action.
Yeah, it's a patience game, unfortunately, because a lot of times you'll get antsy and want to front run it or something, and then it kicks your butt. So I don't know which is harder, you know, waiting forever or getting front run and get stopped out. I don't know which one's worse sometimes.
Yeah,
but
exactly.
I'd rather go for not losing the money, and just trying to stay patient, which is something.
Yeah, I'm too old to lose money when I don't have to. Don't forget, guys, hit the like button, subscribe, follow the channel, follow me wherever you're following us, watching this right now, X or whatnot. FiboSwanny's tag is in his thing there, at FiboSwanny. It's also underneath the video here on YouTube if you want to follow him, which you should, on Twitter. He is a he doesn't like the institutions getting involved in Bitcoin, so that's kind of, you know, I'm of the other side, which is it was inevitable to happen, and it is what it is. We're going to see how it all goes. He's very much the down with them. Let's slice their heads off and roll them down the bowling alley.
Yeah, it's definitely an ideology thing. But the thing is what we do with trading is completely separate than what's happening in that realm of the world.
Yeah.
So regardless of what's happening and what your thoughts are and what's going on behind the scenes, we're measuring psychology, so the markets will let us know which way is crazy, which way is not, that kind of stuff. So
yeah, and by the way, guys,
yeah, go ahead.
I was just gonna say, if you guys missed it this week, I had the first episode of our new show, Beards and Bitcoin, on Wednesdays, 11 a.m. Central, 12 p.m. Eastern, and I've got co-host Andrew and Tillman, and we just bring you a wealth of information about Bitcoin, any kind of insider information we hear, stuff like that. And we're all older guys. Tillman's a little younger. But anyway, and a lot of experience in different things. Tillman in mining, Andrew in the institutional side of things, with a lot of great connections still in there. So if you're ever kind of wondering about, more about the fundamentals of Bitcoin and how does the news that's coming out of Bitcoin affect things, and what are the institutions really doing and really looking at, and why, and how are the miners really kind of, are they going to consolidate, and who's doing what and why? You guys tune in for that every Wednesday. All right. So anyway, I just want to kind of get that in there while I was thinking about a terrible reminding people to do these things, hit the likes and stuff like that, and tell about the other shows. But I see you've got the dollar index here.
Yeah. I was just checking some things out here. The dollar to me is, kind of a mess. But we went into the bull zone. Didn't really get off to the races like we'd like to see. Momentum's, not great. A little bit more momentum for the bears at the moment. However, we are holding the bull zone. But really, it's kind of this. There's not a lot going on, indicator wise, for me to really dig one way or the other. So if I just stick to plan is bear zone still until it isn't, I guess. But so a little bit more sideways here. I haven't really done much on the 4 hour because I've been waiting more on the daily. But if this went into the bull zone and you bought into the bull zone and you're still holding because it's still in the bull zone, the near term target was 105.24. But if you had a little bit more guts and more risk, the next target was the 106.02. If you want to hold it for a little bit while longer. I haven't done anything on it. When it comes to the dollar, for me, I don't trade this one as much, but I only really trade the 4 hour on the dollar is when the daily is a little bit more structure, I guess you would say, or at least in trend. Yeah. And right now we've been in the bear zone on the dollar for a while on the daily, and I've been waiting for a move down to at least the extension, because the extensions are where I feel like it's typically the area where the reversals can happen. So that's what I'm kind of waiting for, is to get down to this 103.17 area to even consider buying while in the bear zone. And 103 is underneath the lows here. So that's why I really don't want to do much with this. I really would rather get a trend established, and a lot of that has to do with how I approach spot trading versus leverage, and the dollar and the SPY and all those contracts are futures contracts that I trade. So I'm a lot more hesitant on the 4 hour if the daily's not bull yet, because of leverage. You just don't want to get your butt kicked too hard. So I want to definitely get an established trend before I do a lot on the 4 hour. But right now, 4 hour is in bull zone, but it's trying. But really, the daily is what's kind of established that sideways to lower market as we just kind of limbo land again. Just another contract that's testing patience.
Yeah, well, a lot of them are, right. I mean, it's all kind of sideways. If we look at what I've got here, I mean, nothing's changed for me, and if we look at this, I mean, really deviation here, deviation a little bit, but I mean, really, this is just kind of sideways in this large kind of range, a 7-point range from back here in February of 23. So over a year now, right? We dipped a little lower, then pushed a little higher, and then here, and we're kind of just continuing to consolidate. For me right here, right now, this looks like just an ABC up. Currently, this is just an ABC down. So we got, again, like you were saying, you're looking for some more movement down, If we can do that, potentially give us a fifth wave down, and we can look at maybe a 3-wave rally and then look for it to start pushing down, and maybe start repeating this just over here. As long as this swing high
change, right?
Do I now?
The weekly pivot, that'll change after today.
Well, the daily, daily.
Oh, yeah. Okay.
Yeah. I'm not daily, not the weekly on this one. But yeah, the daily one will change, after today. So when the market opens next week, this is the future. So when the futures market opens on Sunday, Sunday afternoon or whatever, it'll change. But yeah, I mean, the weekly pivot will stay the same though, through the end of the year. I just call it, it's the yearly pivot. I call it the weekly because it shows up on the weekly and the monthly.
I got it. That's what you got. I got you. I got you.
Yeah. So, I mean, for me, as long as wave 2, as long as what I believe is probably wave 2 up here continues to hold as resistance, we should look for a breakdown below, below 100, below that 99.25, and, potentially continue heading quite a bit lower. What does that say about the rest of the world? Not so great, but, it is what it is. It would probably say really good things for, Bitcoin and gold and silver and, hard or hardish assets like that. The cool thing about Bitcoin is, unlike gold and silver, where they can continually to find more, and of course, we know they're up there in the asteroids and everything. There's a ton of it around. It's not like there's a limited supply. Bitcoin's limited though, right? The number that are out there now. That doesn't mean you're not going to have, derivatives, some financial engineering derivatives products coming off that. We talked about that on Wednesday on the Beards of Bitcoin show. But Bitcoin itself is going to be that layer of it. Bitcoin's going to be limited. So, it really is a much harder asset than gold or silver. So take that, Schiff. Put in your pipe and smoke it, right? But anyway, yeah. So, I mean, that's what I'm kind of looking at. Nothing's changed on mine. We're just going to continue to see if we can get this breakdown. Again, we've been sideways, basically, guys, on this macro look since, getting to be a year and a half ago now. It'll break. It'll break. It won't stay there for another year and a half. It'll break. I would think probably, before the end of this year. But, yeah. So that's where I'm at with that. What you got on there, man? You got ES?
SPY E-mini. Actually just got filled while I'm sitting here on the call. The 61.8% level here at 52.0650. We got to 52.0550, so I am filled. Long while in the bear zone. The way I will attack this is buying at this point. I will sell at the shallow fib, being in the bear zone. On that, so the bounce off of this target so far has worked for the few minutes that I've been long, but that's the way I'm approaching this. If I do end up getting 3-4 hour candles underneath this, that will be my stop, and then I won't look at it until a full retracement back down to 51.06, which is much further down. So that's where I'm at on this. Been in the bear zone, just waiting for it to get down to this target, and it's hit, kind of bounced nicely right off of it, which I kind of like to see. And then we go into the Dow later after this. I got
let's go ahead and do that right now. Yeah, let's go ahead and jump in there right now, since that's what we're talking about on the show. Dow Jones to 50,000.
Time to have some fun with fibs. All right. Yeah. Because I got a couple of charts that are kind of whacked. The sort of like what happened with Ethereum going into the bear zone, but still keeping bullish structure, is key. Because when you look at it here on the daily, went into the bear zone here and worked its way down to the previous shallow fib when it made this high right here. It never had the 3 settles. You would actually buy it there while in the bear zone to get long while in the bear zone for it to work its way back up. And that's exactly what happened. And it actually made a newer high, barely. So I would actually move this out and then the new previous shallow fib that's continuing, and that's from this, from this trend line break and area into the bull zone right here on this nice bull run. So this is going to be that key line in the sand for me going forward. There is a target on the 200% here. Whoop, things are going nuts. There's a little bit of a target right here at 37,560 on the 200%, which could wick down below this 38.2 if you want to be daring and buy it there. But I'm actually going to I would put an order in right here at the 38.2% level at 37,751. Still working upside, being in bear zone and holding that support. So that's my line in the sand is 37,751. If that ends up getting 3 daily settlements under that, you're looking, it could go much further to the downside. But so far it's holding, and that's a good thing. So when you look at the weekly, I don't have it all drawn up here. I was doing this morning when Chris said, "Hey, we're going to be talking about the Dow." The bull zone here,
man.
Yeah, that's right. I had a couple charts. I just expanded from it. The bull zone right here, basically, if you draw a trend line right here, kind of went into this area here, well, first of all, it went into the bull zone, and then you hit the first target, which is this extension level between 36.7 and 37.6. And as you can see, once it broke this and worked its way back down to support, this is still going to be key support, with the target being the 200% at 41.4, as that next target being long off the shallow fib buy here at 38.102, which is where we be long at the moment, going into that target at 41.4. So for the Dow Jones, bullish structure, but in bear zone on the daily. The weekly is still long-term to the upside. And then we go into a couple other things. When I look at the daily here, there's a few things I was looking at. One, trend line break here. I don't have all the details of the indicators, but this was a break to the upside here, to where there's an upside target that brings about 47.4 as a target here, or actually that's a little bit underneath that. But so that's a trend line break objective that's still in play, because even though this went up and came all the way back down, if you look at where that mark is right here on the breakout right here held that support. So it's kind of like this kind of a longer term move up, throw back to the trend line, and then work its way back to the upside. So when you look at that and you look at this as just this leg, and you take a trend based extension off of this, you got the 61.8% level that's being tested here as that first level of resistance. But we're also coming into support to keep this trend going to the upside. So if you break that to the 100% here off the trend based extension, that's where you get the 47.4, which is just above this trend line break measurement. So that's going to be the minimum that I think this could go to. We also have this trend line break that brings us to 45.2, which is another target if you're doing a little bit more near term, and you take the trend based extension off of that, and the 100% matches the trend line break. So you got some areas to kind of watch, to where 45 to 50K should definitely be a zone to be watching for as targets to the upside, and everything's working pretty well to where that should happen. Unless, of course, we break down. But right now, nothing's showing that we should be breaking down just yet. And then this is where it gets really, really interesting. And I had fun with this the other day, just kind of messing around. If I look at the monthly and just go all the way back out to freaking 1800s, all the way to today, there's a lot on here, and some of it might be wrong because I haven't changed it in a long time. But I remember having this chart, and there's a few things on here that I really wanted to look at, and one of them was this. This is where I call fun with fibs. If you take this high here to the low, and once we broke out to this high here, broke out and held right here, and then started our way to the upside, I was looking at some of these levels. if you look at the 300%, and all these are fib numbers, 3, 5, 8, 21, 55, 89, 144, all the way to the upside. But the interesting thing is when you look at these levels, this level here held as this 300% level held, broke, and then retested, and then started to take off. And then it broke the 500%, went up to the 80, the 80 or the 800%, which is the 8. Then it came back down and hit the 500, which is at 5, and then worked its way back up, and then it broke the 2100, and then retested and held that level, and then has worked all the way back up to this point, which is the 55, and then it worked its way up, came back down and retested at the 55, broke the 89, and then now it's holding support at the 89. So the next target's the 144, which is at 49.7. Hello, 50K. Yep. Like, it's crazy, like how these patterns work. And then I also took the low to low. There was a low right here and didn't have 3 settles below it. So this is kind of interesting to me right here, to where we had a low and then we had a low right here into this low area of consolidation. And then if you take the same cycle into the next low, there was a low right here that matched up. So our next low in the market is not until 2046. This is very, very long term. But the key to all of this is you're kind of getting this kind of like this 5th wave diagonal maybe of some kind of pattern in here, which brings a lot of different time frames all at one time around that 50K. So I do like that 50K target. Another one is breaking this one to the upside, has a 45,850 as another target. And then we also had the retracements back here during these consolidation periods. This one was about 47. This was 51. And then I did this one. If it got all the way up to 50K, the retracement would bring us back to, basically like 26 or so, if that happened. I'm just throwing that in there. But what I'm showing is like the fib levels on different time frames have worked really well. Even when you look at super, super long time frame, works out pretty nicely for really, really key support and resistance levels. So that's why I like 50. That's why I put 49.7 here. Basically roughing, 50K, even when you round it up when you look at this time frame. But that's why I highlighted this blue zone is anywhere from the minimum of, basically the minimum would be 45.2 on this one, and then all the way up to that 49.7. But this blue zone is really that zone that I think we could get to over the next several months.
Yeah, no, man, I love it. I love it. It kind of aligns almost pretty well with what I'm looking at.
So it's a little fun with fibs. So let's see what you got.
Yeah, so I've been talking about for a while now. When I figured out that the top wasn't in and we were pulling back and we were going to break out higher, I'd been talking to us and we were in the 20s, I guess. I was saying, well, if this happens, what happened, which is we pulled back and we broke out, just made a pullback instead of a reversal. Mm-hmm. I said, the odds are we're going to target that 50,000 level. Why? Because it's the only thing that really makes sense, especially when you think of in terms of, well, sure, zeros, tens numbers are psychological, but man, 50,000, that is significantly, psychological. And so we look in here, and I've got this count coming off that pullback here from October of 22. And this has us right now. I believe this wave circle 4 may be complete. It was almost the 38.2. We have this large weekly fair value gap here in yellow, low volume node. So that should hold if we were to hit that. I think if we were to hit that, that would say that we've got an A, a B, and a C for a flat for wave 4. But right now where we're at, if we can turn and rally back up from here, looks like we have a 1, 2. That gives us this larger 1, 2, 3 up here at 44,242, which gives us a minimum expected wave 5 at 47,884. And now that's just assuming that wave 4 is complete here. We don't pull back to the 38.2 or even the 50% here at 37,141 or 36,183. That's assuming we don't do that, because that'll give us even higher targets if we do that. That's also assuming that this larger degree wave 3 doesn't overextend higher that's also assuming that wave 4 only pulls back again 38.2 and not 50%. So there's a lot of assumptions in here where we can get secondary targets, which give us further pullbacks or further extensions, which would take us likely closer to 50,000. Again, my thought being you're getting around 48,000, you're that close to 50,000, people are going to try and push. People are going to try to buy it into 50. I would be careful around that area. I think if we get there, which it looks like we should, based on, when I'm looking at my chart and then what you were looking at yours, I think, if you're in it at that point, be cautious. It doesn't mean you have to necessarily get right out, but you should be paying attention then more than you've ever paid attention in your life when it comes to the markets, because there's the potential for that to be a huge kind of reversal, coming out of there. And, interestingly enough, if that happens here over the next year or so, that kind of aligns with this idea that we had, that we had that big 1930s Great Depression coming out of 1929 down, and we're looking for the next, potential Depression-esque type thing happening. It's been 100 years. And so if that were to happen, it should probably, that was a pretty sharp pullback. So it would probably be more of a longer term sideways kind of thing. Again, thinking theory of alternation with Elliott wave, which is when you have a sharp correction, the other one's usually more drawn out, shorter correction. So I think we got a lot of interesting things coming up. I've been telling people the last 2 years now, make as much money as you can right now in the markets, and get ready. That potential. Not that you can make a crap ton of money on that, guys. Often more money is made on big recessions, on the pull down of the market, than they are on the going up, right? And so, if you can make as much money as you can make right now as a trader, really build up that capital account and be ready for that shorting opportunity. And then you really get to short for a while and get to really do it well. And more importantly, not only that, but as you hit the bottom of there, you have all that opportunity to go up higher, to buy low for the next run up higher. So there's a lot of opportunity in the markets. Don't think because we may get to some top that it's going to pull back for, whatever amount of time, that it's all terrible. The economy is going to suck. People are going to lose jobs. Businesses are going to go out of business and whatnot. But if you're trading, you have the opportunity to make absolute ungodly amounts of money if you're aware of that coming up and that you can do that. A lot of people that come into trading, they're fair weather traders. They trade when prices going up. Ooh, they're all excited prices going up. But when you get to a bear market, they get out, they leave. You see it with a lot of your crypto Twitter influencers. They disappeared when Bitcoin was pulling back, doing its bear market there. They disappeared. Then they came back, a half a year or a year into the rally off the bear market low. So, if you're going to be a trader, don't just be a fair weather trader. Learn to do it. Learn to take advantage of what the market gives you. There's so much money to be made. Okay. Oh, look at that. Troy just said, what'd you say here? This has been one of the best streams since I started watching 3 years ago. Man, appreciate it. Love that. But yeah, so anyway, that'll be that. We're running out of time here. Fibo, go ahead and jump on what you got, man.
That's all I got.
That's all you got on there? Okay.
Yeah,
right.
unless you want something else.
No, I'm going to go ahead and pull up.
That's all the ones I had open, my tabs from this morning. So.
Yeah, well,
I have
go ahead and pull
1,000 other charts behind the scenes.
Well, don't we always?
Yeah, exactly.
I just want to bring up 2 extra charts here, guys. I've got TLT here. I've been talking about this for a while. Again, we had this nice capitulation move here. We've got the move up. It looks like we've got 3 waves pulling back here on the monthly. Let me see here. We've got a pullback of 70.5%. My favorite pullback there, looking for a breakout above this swing high at 92.29. Oh, I'm sorry. Nope. At 96.40. If we can break out above that, that should send us off into the next move up. And that'll give us 5 waves up around minimum 129 and 77. But I think, of course, it'll overextend and we'll probably push up higher. But, again, I think that bottom's looking like it's potentially quite in there. We had this bullish divergence right here at the low, and then this nice big candle coming off with similar. Look at all this volume coming in here, guys, compared to where it had been. Even on the drop, it only been here. This is often what a bottom looks like, where you got this big chunk of volume still coming in as you're at the bottom and kind of pulling back. So we're just looking for that breakout above that to head up higher again, and then I think we go up a minimum 129.77, and potentially even higher from there. But that gets us in this nice just above this nice fair value gap right here on the monthly, and into kind of this lower volume node in there. So I like that showing up as it is right now. Just looking for that move up higher. RTY, I've been talking about this a bit since we were doing this accumulation range here. We had, let me see, what do we have here? We were moving in here about 546 days of consolidation. So we have it here. We broke out. We pulled back to this, back up the edge of the creek area, looks like here, which is just appearing to be a triangle. It looks like we've got an A, B, C, D. And I think we pull back a little bit further. We could pull back a little bit further, maybe down toward right around 2000 or so, 2000, 2010. And then I'd look for a rally up if we break out above wave D here at 2132.5. That should give us, based on the height of wave 4, there's a triangle, the height of the swing low, gives us a target about 2339, which gives us one wave up. This out of the way here. One wave up near the swing high. And with Elliott wave, that's what we usually get, guys. We usually get your first 5 subwaves up into the swing high. So that gives you a wave 1, then you pull back for a wave 2. Then you break out on a wave 3. So I still like small caps. I think they're still going to do well. So we'll see how this kind of all plays out there, right? Troy's asking, in that event when we're talking about the potential recession or something like that, depression, in this event, you're talking about basically a deflationary bust. Yeah, probably was what it would end up being. Yeah. So, we'll have to see how it plays out. I still sit at this kind of crossroads of this idea of technology comes in, and technology is deflationary. I don't know if you guys understand that, but technology is deflationary. And so, do we usher in this era of technological advance that keeps us pushing higher for longer? Or do we, do what we kind of expect, which is you get a bigger kind of, like I said, potentially a depression coming in. It's been 100 years since we had the last one just about. So I wouldn't say here, oh yeah, we're definitely at 50,000. We have to get a depression, but I think it's definitely something worth paying attention to. But if we don't get something like that, I think it's going to be due to some kind of technological golden age that's just going to really kind of just pull us up. But after that would be really bad, I think, because it just keeps overextending higher. So, again, we don't have crystal balls here. We don't, we can't tell the future necessarily. We can give forecasts based on, human beings. That's what we're doing. That's what Fibo does. That's what I do. We're looking at the charts, but what are the charts? They're just physical representations of this emotional movement between fear and greed in the aggregate. That's all it is. So, what I'm doing and how I do it and what he's doing and how he does it, it's all about measuring that human psychology. And humans tend to stick to patterns, and that's why they're forecastable. I hate the word predictable, because predictions are made, not based on anything else, right? Forecasts are made on data, on things that have already happened. So that's what we kind of look about that. Let me see here. Troy says perhaps we got that push in tech over the last 10 to 15 years, and it's coming to a head here soon, maybe, potentially. But, when I'm looking at that, I'm looking at AI right now. And it's not because of AI itself. It's what, it's never about the thing itself. It's always about what's the derivative of it. So what happens because of it? So everybody's all excited about AI, because of AI. I'm more interested in if we get something like that, it's because of what AI leads to, what AI enables. So when I'm looking at, that's kind of what I look and
it
how I kind of look
enables
at it.
money. That's
I
what
like
it
money.
enables.
I like
Because
money.
I mean, it's just the next phase of the overall world making money, right? We went from climate change was a definite money maker across the world. Doesn't depend on what your view is. It's just that's what businesses went toward. And then there was the whole ESG market, environmental social governance, and then that was a big money maker. Now AI is the next topic, and now it's going to be the big money maker for AI. So I can see it being pushed up because of that. And maybe that's the end. I don't know, or not the end, but
for now,
the reversal of a major bull market.
Yeah.
But who knows? Who knows? That's why we follow charts and in all different time frames, because that will let us know when things really are starting to break down.
There you go.
And until then, ride it.
That's right. And when it goes the other way, ride it the other way. Make the money, guys. Trading is about the market either way. It's not about just being fair weather. It's not just about when the market goes up, because you're going to have recessions, you're going to have depressions, and you want to be just as insightful and able to trade those as you are when the market's going up. Because again, it lets you build a whole hell of a lot of in your account to be deployed for longer term investing at the lows. And that's where you get in. Imagine all the things you could have bought, when the stock market bottomed out around March of 2009, when everybody, I'm sure most of y'all were scared out of your wits, right? Because it had been going down. We had that whole implosion of the mortgage market and everything. But man, oh man, look at what's happened since then. Look at how high the stocks have gone since then. So a lot of potential there. Anyway,
you're talking your age. There could be people in there that weren't even barely born yet.
they're like, what happened in 2009, 2008?
I was only 9 years old. What was going on? I don't know what was going on. I was only 9.
Oh man! All right. Well, hey, listen, I've had a great day today. I hope you guys have had a great time with this show. Jump on Fibo's his Twitter there and say, hey, what's up, man? Thank you for the show. We always appreciate him being a part of this here. Again, you can follow him, as it says there, at FiboSwanny on Twitter. I'm TX West Capital on Twitter because somebody took Texas. Jerk. Anyway. But yeah. Real quick, guys. Hey, listen, if you want to join us, this is the last few days of our group coaching discount right now. So the code is underneath the thing here, or if you're on Twitter, it's right there in my pinned post. I can't remember what it is to be off the top of my head, but jump on it while you can. We've got a whole bunch of new stuff coming in. I'm working on starting a daily live trading with you guys in our group coaching as well coming up here. We got a price action course we're about to release based on ICT and my experience in the last 30 years of trading. A lot of it overlaps, but there are some things I'll do a little bit differently that have been really profitable. And so that comes out there as well. At the end of the day, guys, you're in the market. You can either sit here and keep throwing the market and losing it, if that's what you've been doing, or, you can choose to take the shortcut, right? Get somebody's help who's been in here for 30 years, all different markets doing it. Fibo's over there as well. You can join into his program as well over there. It's a great complement to what I teach, or at least that's what that's the feedback we get from the people that are in both.
Yeah, no, I agree. I agree.
But yeah. So at the end of the day, guys, with Fibo and myself, you're getting 50 years of experience. You're getting people who genuinely enjoy teaching you. We genuinely want to help you be successful. But at the end of the day, neither Fibo nor myself can actually do the work for you. We can show you what to do. We can answer questions. We encourage questions because it's the only way you're going to learn. We encourage discussion with the other people in the group and then the other students, because that's going to increase significantly how quickly you learn and how well you learn it. But at the end of the day, I always tell you guys, focus, discipline, consistency, and patience. If you can apply all that to learning to trade, it's going to be an amazing skill that's going to pay off for the rest of your life. And it'll allow you to do what you want to do. If you like your job, you can continue working it and make more money though, right? On the side. If you don't like your job, you don't want to work for the man, it allows you to work into a position where you don't have to work for the man anymore. If you just want to build wealth for your children, it allows you to do that. There's so much it does, but you can't be into the, I got to get rich quick overnight. So, again, one of the things that I talk about a lot in our program, in my program, is that the group coaching is about emotion and about psychology and about here's what the rest of the market is doing and, and what you're probably feeling. Here's how to notice it, pay attention to it. This is how it's going to disrupt you, things like that. So,
and it's
anyway, the code is MD2024. That's what it is.
Oh, cool.
Right there.
Yeah, that's a subject that needs to be, and that's why we're doing this is a lot of people don't really take social mood and measuring psychology as the main thing and then work from there. I think a lot of times they do a lot of stuff and then they use that on the downside of all the other information that's out there. And I it's not a right or wrong. I mean, maybe, but no, it's just that when I first started versus where I'm at today, if it wasn't for learning how to, for one, managing emotions is number one, but second of all is measuring that social crowd psychology.
Yeah.
If you can find ways to do that right there is the light bulb that went off for me many years ago. And it's like, wow, I can actually see things that I haven't seen before looking at price charts. And you get a lot of information from that. But that's why Chris and I are here, because that's something that we need to teach, because that's not taught anywhere. It's almost exactly the opposite on 90% of the people that are out there. And to me, that's the main thing that needs to be taught besides emotion, managing emotion.
Yeah.
And those two together and done right with good risk management. I mean, not that you're going to be rich overnight, but at least you'll be steady and you'll be alive financially to actually continue trading. That's the main thing,
that's the goal.
A lot of people look at me like, why don't you do a lot of leverage and all that? I'm 80% spot. And I know it takes a little bit more capital to trade spot to get anything out of it, right? But it's all about the percentage gains. If you keep doing the gains over time, you might not be rich overnight, but at least you'll be steady over time and, compounding this and compounding that, the eighth wonder of the world, right?
Compound. That's right.
So it just takes time, patience, all that kind of stuff. But like you said, nothing's easy. You do have to put in the work. And that's what we're here to kind of help do that, kind of steer you into that. Because I really want people to take what I do and take bits and pieces of it and build your own thing.
Yes.
That works and fits your personality and your risk tolerance, because it might not match mine. And because I get a lot of questions like, well, why did you sell there? Blah, blah, blah. Well, I have my reasons and I have, rules and guidelines and I go by them. And then that's just the way I fit my risk personality versus many others. So, but the tools work. You just gotta learn how to use them. And unfortunately, that's not an overnight thing.
No, it's like any other skill set worth having. It's going to take you time to learn. You're not going to do it overnight. So anyway, we're going to get out of here, guys. That's been just over an hour and a half. Somehow we tend to keep stretching this. So we really appreciate you guys watching as always. Let's see, Fibbo, you said you're going to be gone for a couple. You got vacation coming up, right? So you probably won't be back until end of the month, maybe?
Yeah, it'll be a while. Toward the end of the month.
All right, guys. So you heard that. He'll be back in a few weeks, toward the end of the month, maybe something like that. He's going to go try and not get arrested in another country. And so, Yeah. All right. Hey, listen, guys. Fibbo, thank you so much for joining as always, man. Everybody else, remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope you guys and gals have an amazing weekend. Y'all trade safe. Don't forget to take some time away from the charts, because otherwise it's going to drive you crazy. Get the reset, do something different, and come back, and they'll be a lot clearer, all right? Y'all take care, and I will see you next Friday, or hopefully you'll join in, and we'll see you over at the Trading Academy, guys. Again, the links are below the YouTube video here, and they're in the pin post on on my profile there on X at TX West Capital. Take care, everybody.